There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome to the Trade Justice Podcast. Matt Justice, your host, obviously. I want to welcome out two amazing guests here, Jeff Crystal from Bare Naked Forex Trading, or Bare Naked Trader, and Kurt Warner from the Richdad Education Group. Jeff, how are you?
Good. How are you doing, Matt?
Doing absolutely fantastic. Kurt, how you doing?
Very well, Matt.
Awesome. Kind of just wanted the topic of discussion here today at the Trade Justice Podcast is Forex trading, number one, and number two, Jeff and Kurt have been working on this absolutely amazing tool, and I truly do say amazing. I've been playing around with it the last couple weeks. I've been just absolutely falling in love with it. I see my Forex trading kind of taking a nice little evolution over the next year using the FATtools and whatnot, and we'll talk about what those tools are and kind of how they were created over the last few years. So we'll save that for a second. But I want to talk about Forex in general. Jeff, the people who listen to the Trading Justice podcast are people that have interest in trading. Maybe they don't know exactly what it's all about. So can you kind of talk to the group about what Forex is and how we trade it?
Well, it's a hedge of debt, and it's used so that banks make sure that they're not exposed to their overprinting of money. In short, that'd be the short answer of it. How do you trade it? I like to trade it with semi-automated tools so that I don't have to spend all the PC time. I can turn the computer on and have it start to take a trade for me.
Mm-hmm. And in terms of the currencies out there that you like trading, what type of currencies do you trade? How does that process work?
I trade all the G8s. Which would be the British pound sterling, the Canadian, and then you've got the New Zealand and the Australian currency, Japan, obviously the United States one, and the euro, and the Swiss franc. Mm-hmm. So those 8 major currencies are the ones that I'll sit down and trade on a day-to-day basis. Lately, I've been trading a lot of Australian currencies. Mm-hmm. Mainly because the interest rate is much higher in Australia, and they're trending nice and getting some movements out of them.
Yeah, the Australian dollar is starting to turn around a little bit. It's having some reversal technical patterns. I like the Australian as well. You mentioned something there that I want to talk about, though. You said it has a higher interest rate. How does that benefit you? Kind of how does that work? And kind of what you're talking about is a swap rate, the carry trade. How does that trade actually work, though?
Well, a swap trade, a swap rate would work like this. You would go long one currency pair and you'd go short the other currency pair. And you're borrowing money in one country and loaning it out in another country. Mm-hmm. And when that happens, you either are being forced to pay an interest rate or you're going to be given an interest rate. So, for example, and it depends on the platform that you're using. Well, actually, either the broker that you're using, they would actually tell you the rates that you would be given or charged. But right now, I use the IBFX platform. I like them, and I've used them for a number of years. And their interest rates vary a little bit, and so you would have to pay one interest rate. So if I was going to trade something from Australia, what would happen is literally in Forex, I might borrow money in the United States. Now, our interest rate's really, really, really low. Mm-hmm. No big deal about borrowing money in the United States. But I would loan that money back out in Australia. Mm-hmm. Okay? And because I loan that money out in Australia, I would get the difference between the two interest rates.
Gotcha. And that's why it's called the carry, because you're carrying either a negative interest rate or you're carrying a positive interest rate, correct?
That's right.
And with the Australia right now, they have a slightly higher interest rate than the U.S. has. So you're borrowing money in the U.S., selling it in Australia, and you get to carry the positive interest rate. And about what is that interest rate?
the interest rate in Australia right now?
Yeah.
There's two that I've been focusing on. The New Zealand one's just recently hiked theirs, and I'll give you the Australian one. I'll pull it up. Now you got to remember that this is different per desk
Gotcha.
that you use. Not all desks are going to give you the same rate.
Is it going to be close?
And I'm just seeing if I've got it published right on here. They have a little tool that publishes them on here, and I'll grab it in 30 more seconds.
Appreciate that. And
I'm just waiting for my computer to catch up.
You're perfectly fine.
And so I give you the exact one. I feel like it's important to get you the exact number here. So I'll have it on here in just a couple more seconds. So if you took, let's grab the Australian one, Australian USD.
Mm-hmm.
Okay, so here's the Australian United States dollar. Okay, so if you came into the United States and you grab this, what you'd be doing is it would be your negative rate, or your net rate for being long the Australian is 5.19%. That's your rate for being long the Australian. If you're short the Australian, that means that you've loaned money out in the United States. Your interest rate would be 8.82%. Now, the dealing desks mark these up a little bit to you.
Mm-hmm.
So that swap rate that you have to work with, it's marked up. So they'll make some profit on it. Your broker or dealing desk will make some profit on it. But the rate right now on IBFX is 5.19 to be long the Australian. And to be short the Australian US is 8.82.
So if we buy the Australian dollar, sell the US dollar, we get to carry a positive interest rate of about 5% then. Is that 5%
correct? 5% over a year. So and the interesting thing about that is you only have to put up $2,000 to get $100,000. Well, you're going to gain 5% interest, and you're only going to have to put up $2,000. So that means you would acquire a $5,000 positive balance after a year passed, and that balance would be paid to you every night. They pay a little bit, but you'd have to hold the trade open a year to get the full 5.19%.
Gotcha. So you do make that profit on a daily basis. It's just averaged out over an entire year, and it's off the total amount borrowed. It's not off what you put up in margin. Correct?
That's correct.
Awesome. And this is one of the most popular trades in the world, if I'm not mistaken.
There are big institutions will pack really, really large positions onto this. As far as it biases the direction. As far as individual traders, I don't know if it's the most popular one for an individual, but for institutions, they're totally biased by whether they receive interest or pay interest.
Mm-hmm. Well, the way I see it, Jeff and Kurt, and correct me if I'm wrong, and obviously disagree if you want, but the U.S. dollar, there's a lot of issues going along with the U.S. dollars currently, the reserve status. There's a lot of pressure being placed upon the U.S. dollar in the global marketplace. And one of the things that we want to do is diversify away from the U.S. dollar in some capacity. This trade allows us to buy a currency, the Australian dollar, sell the U.S. dollar, so get a little protection in that capacity. We like it from a directional standpoint, and we get to carry a positive interest rate. And that sounds like a win-win to me.
You could, by going along the Australian, there's a lot of really famous people that have been moving down there.
Yeah.
Wozniak, the Clintons bought some property down there. That's not to infer that they know any more than the rest of us about what's going on, but Australia is a good, strong economy and a good country.
Yeah, absolutely. Hey, Kurt, I want to bring you in here. Are you still there?
Yes, I am.
Kurt, kind of talk to me about kind of your journey in the currency market. Were you trading currencies before you got hooked up with Jeff, or what did it happen after? Kind of how did that work out?
No, I actually started trading options primarily, and this is back early 2009. So, almost at the bottom, I guess, of the financial downturn is when I actually started trading. And in May of that year, I decided to take the forex class that was offered by Richdad Education with Jeff as the instructor. And to be honest, Jeff, and no offense, it took me a couple weeks to really grasp what he was saying. Once Sorry, go ahead, Matt.
Oh no, I was just chuckling because it might have took you a couple weeks. It took me a good year. So I get that.
But once I really grasped the concept and the power of forex, and how simple it was, not having to worry about various Greeks, and really there were the major currency pairs that you could trade, as well as some of the exotic pairs.
Mm-hmm.
I was hooked, and I think what really pushed me forward is getting to know Jeff and the tools that he was working on. Because my problem, just like a lot of traders, is you want to trade, but you can't sit in front of your computer 24 hours a day.
Mm-hmm.
5.5 days a week to actually trade the currency market. So, when he started developing the tools, I was, right on board and testing and helping out. So yeah, I've been trading currency since, for a few years now.
Yeah. I started trading currencies, probably 2011. And I was very similar to you. Got started in the options market. I love the options market. I still love the options market. But the thing that I kind of fell in love with the currency market is it's a very straightforward market. It's a technically driven market. It's a 24-hour market, and you don't have all those, the depth of the options market. You don't have all the volatility stuff. You don't have all the deltas and the vegas and the gammas and the thetas and all that stuff. And you don't have all these 40, 50 different strategies you got to learn. It's 6 major currencies that you really or major currency pairs that you kind of focus on, and it's a straightforward market. And I truly do believe that it's a marketplace that everybody can participate in, and everybody can learn how to trade currencies the proper way. And you mentioned Jeff had a class, and for everybody that knows, Jeff is a contractor for Richdad Education. I am a contractor for Richdad Education. Jeff teaches a class called Focus Forex. And the Forex class basically teaches people how to trade Forex. But one thing that you guys have been working on in the last couple of years is to get a little bit of automation in the currency market, because like you both said, who has 24 hours a day to sit in front of the computer, and who wants to sit in front of their computer 24 hours a day to get out there and trade. So Jeff, I want to bring you back on. I want you to talk to me about the FATtools for a second. And what FATtools are their forex assisted trading tools. Jeff, when did you start developing FATtools, and what was the mindset? Where did the ambition come from for you to even develop this tool?
Well, it was about 10 years ago. I lived through September 11th. I was long stock, and I was long calls actually on September 11th. It thumped on me, and it took a significant amount of my capital. I went through an ugly divorce and a layoff at the same time. So divorce, laid off, and long calls on about the same month. That left me cash poor. So I started studying the Forex market, but it was day trading, a lot of it that I was doing in the Forex market. Mm-hmm. I didn't enjoy the computer time. Now you can swing trade at that time I was day trading it. You can swing trade it. There's techniques that we use, but there were some things I started to understand that they made some changes in the Forex market, so you could get down to what I call exact risk sizing. You could get so small with risk compared to the cost of trading it that you could have a computer trade for me. And this is kind of funny. You guys ever seen that Richard Pryor show with Superman, where Richard Pryor rips off like a penny out of every single account?
Yeah, which one
he
is
becomes
that?
Wealthy, and I don't know if you guys remember that.
I remember. I don't remember which Superman it was though.
Yeah. It's old.
Yeah.
It's old. But I started thinking, well, geez, we can make a computer system do that. So I started studying how to program, and I didn't know how to program. I taught myself, and then I got some good business partners, and we sat down and we started taking models that I was well aware of, and we started placing them into tools and making the computer do it. Now, mm-hmm. The next evolution was a TED Talk by a guy named Sean Gorley. He started talking about how the institutions started to change their systems, and what they did is they said, well, we're not going to go for full automatic black boxes that trade for you. What they do is they go for what's called augmented intelligence tools. Those things will trade and do 90% of the work, and then they just have alarms for the traders. So the trader goes to work during the day. He monitors a large portfolio and just waits for an alarm. Mm-hmm. When the alarm goes off, he has to assess the risk. That's where the education part comes in.
Gotcha.
Help you assess the risk and how to configure tools to trade for you automatically. That was one motivation, was to get out away from the computer time. So to be concise, no more computer time. I wanted the low cost of entry because I'd been thumped on September 11th. But the third one, which a lot of people find interesting, is I don't believe that, I'm like Robert, I don't believe that going to college is the best answer all the time. And I don't believe that there's always jobs out there for people who do go to college. Mm-hmm. And if there is jobs, they're not the ones you want. So I wanted to show my kids how to trade forex, and I could tell you a quick story. My one son took a forex trade, and he did really well the first time, but the next time he traded by himself. He came to me and he goes, "Dad, they took all my money overnight." And I said, "Well, that happens to me all the time, son. They take my money sometimes overnight."
Yeah.
And I wanted something to be able to trade the 24-hour clock and manage that, and I'd be able to teach my kids how to trade. So the motivation there was to teach my children how to do it. So it takes a long time to get to simple. Mm-hmm. To get something really simple, it takes a lot of development years. And I've been working on tools for my own trading off and on since 2001. So that's quite some time. And they just kept evolving and maturing into stronger and stronger tool set to trade with. And then I believe I bumped into you, and you liked the looks at some of them and started playing with some of those yourself. Same with Kurt.
Mm-hmm. Looking at kind of that motivation and that story, Jeff, has always kind of stood with me. I know you had some pure motivation just to kind of automate it for yourself as well. But to be able to sit down, have the ability from a knowledge standpoint, from a technological standpoint, to say, you know what, I'm a little worried about the future. I'm a little worried about, my kids as they're growing up, because let's face it, guys, our children as they grow up, they're growing up in a different environment, a different economy than we did. When you're talking about people who graduate from college today, you're talking about 11% of them are unemployed, cannot get a job. 57% of them are underemployed, and it's really creating this massive debt problem because they have to go back to school just to not pay their student loan debts. And this is an environment that when we came through the system, we weren't faced with these types of problems in the marketplace, and our kids are. And I just think it's absolutely amazing that you had the ability to take something from an idea stage and really kind of develop over it. And it really has been a decade-long process. And it's a testament to your dedication to that, Jeff. And I'll tell you right now, I don't think there's been a time in my trading that I've been as excited for a new technology as I am for the FATtools. And once again, what those are, the forex-assisted trading tools that we offer here at Richdad Education, our classes and whatnot. And I'll tell you guys how you can get involved in that here in just a little bit. I want to bring Kurt back in. Kurt, I remember back, I believe, Jeff, and correct me if I'm wrong, but it was about 2009 when you first came to me with the initial development. I believe we called that Redfish at one point, which is obviously no longer being utilized. But then it was it 2010, Kurt, that you guys started the process of evolving Redfish into the current FATtools?
Well, I actually was a user of the original Redfish, and I think that's when Jeff and I started talking on I think you said, Jeff, that I was speaking to you more than you were speaking to your wife, and I think the same goes for me. And then I think FATtools, started developing a few years after. Mm-hmm. And I think one of the things I think Jeff has done an excellent job at is, adjusting and not just, sticking with one path, one idea, and always adding models to the FATtools to make them, usable by a greater, I guess, variety of people, regardless of what their trade psychology is, mm-hmm. what their risk tolerance is. There's certainly, a model in there that would work for everybody.
Gotcha. And in terms of the FATtools, and I'm going to get back to Jeff in terms of exactly how they work, but Kurt, how would you explain to somebody that is interested in not only forex trading but the automated part of it? How would you describe what FATtools specifically is?
I think the simplest way that, and Jeff has said this numerous times, and it's always stuck with me, is, FATtools balances your need or want for money with the time you have available. Mm-hmm. So for anybody that wants to trade and trade successfully, and as you said, does not have 24 hours a day to sit in front of a computer, FATtools is the answer. All the way from not only limiting the time that you need in front of the PC, but also making sure that your trade management goes well, adjusting your stops, adjusting your targets. If you are somebody that, likes to take on more risk, then there's a model for you that can do that. With bourbon, if you're somebody that, is okay with having a lower win percentage, but, enjoys seeing a nice run, and, so your profitable trades are extremely profitable, then betting's a nice one. And then for those people that are more advanced, there's a variety of variance trades that, use two pairs, whether, they are, coming together or moving apart. Mm-hmm. I would say forex, and I tell people this all the time, that forex is certainly, I think, the area that most people starting off as traders should look at. A lot of people, have a desire to get into stocks to, buy shares of some of their favorite companies and or go into options trading. And for somebody to go into stock trading, they require a significant amount of capital, for them to generate enough income in a year where, the time they're putting in, they're seeing a good return on that time invested. Mm-hmm. Options obviously require less capital, but once again, what you can see in a year, as far as return, doesn't come close to what you can generate with forex. And mm-hmm. once again, it is simpler. You're dealing with, one or two charts, depending on the model within FATtools that you're using. Once again, it does come down to education, but that educational path, I think, is, not as long as somebody that wants to pursue options in stock trading.
Yeah, I would absolutely agree with that. And one last question, then I'll bring Jeff back in. In terms of the new traders out there, somebody that just wants to get to the point where they can trade currencies, how quickly do you think somebody, if they come into the education system, they get FATtools to take a couple classes, how quickly do you think somebody could get up and running and start showing a profit in terms of their currency trading?
I would say it would vary depending on the person's background. If we were talking about somebody that has never traded anything before, mm-hmm. It's going to take them a little longer. Obviously, they have to understand, how to read charts and candles and the different patterns. And at the same time, they'd have to understand how to, use FATtools, determine which model works for them. Just like anything else, it's a journey. It's not a sprint.
Absolutely.
But I would say, going through a few classes, the lab that Jeff teaches on Thursday nights, where he does focus, on the tools and kind of brings tools together, maybe 6 months. I don't know, Jeff, if you agree with that, a shorter or longer term, but I think if they're truly dedicated, mm-hmm. yeah, I think if they're truly dedicated at 6 months, they should be the place where they're trading, and, the education and mentorships and things like that, are put together are there to support them and to help them on that journey. But one of the things that, is also very nice about forex, and especially with the FATtools, is they can actually start right away in a demo account with no risk of their real mm-hmm. money. And if somebody's willing to put the time in to do that, that learning curve is not going to be as steep.
Awesome. Jeff, same question to you. You've been teaching people how to trade currencies for a decade now. You've been trading currencies for longer than that. You've been developing, programs, automated traders for a very long time, and you've mentored just a ton of different traders about how to trade currencies. What would you say, same question, somebody coming new, they dedicate themselves, to learning this, how quickly can somebody get up and running? Maybe not to the point where they're completely unconscious with it, but to the point where they're out there and they know what they're doing and they can be successful trading.
It's totally up to the person. It depends on how much time they put in. I've seen people that have just dug in, like Pyram, and he put in 15 hours a day for a couple months and started grasping advanced concepts. I mean, it just depends on people.
Mm-hmm. It just depends on, same thing with everything in life, right? how much you want to dedicate yourself.
Anything.
Yeah, exactly. And I think, every guest I've ever had on the podcast has said the same thing. Success, it's a choice. You make the choice, but you got to go out there. You got to work hard. You got to dedicate yourself. You got to get the discipline, the structure. And I think that's what that discipline and structure and the trading and whatnot. I think that's what education is all about. Getting yourself into a proper system, somebody that help you, show you along the ropes and whatnot, and then learning how to use these tools. Jeff, let's specifically talk about Betty for a second, because in FATtools is a ridiculously large thing. All the different indicators, all the different things you can do with it. But let's talk specifically about Betty and Black Bourbon. Jeff, what does Betty specifically do in FATtools?
Well, we have what I call three core. In forex, there are three groupings of there's what's called indicators, scripts. Those are fancy order entries that run once, and then you have experts. They either give you information or they assist you in your trading. Now, the two that you mentioned, those are called experts, and those experts, there's a third one. And as I started to work with people, I found out that not all people can trade the same thing. Like if you walked up to a person and said, "Hey, I'm going to teach you how to do something, but you're going to lose 8 times out of 10. Would you do it very long?" They're like, nope, I'd quit. But if I made a caveat on that and said, when you do win, you're going to win huge. Some people can do that. Some people can say, well, I'm willing to take a little loss, and then win big. 90% of the public, and I think this is sad. This comes down to me. I did a little bit of a psychological test kind of on this. And for years, I would keep copious notes about where the client worked and what model he liked. Most of the people that came to be mentored or worked with, they worked 9 to 5. And 9 to 5 people, they have to have a check that comes in. If they don't have that check and they don't have it within for the amount of time they put in, they're uncomfortable. They need that security line. Entrepreneurs tend to be able to take small, they'll cut their losses small, and then they'll win big. Well, that particular model you brought up, we call it Betty. It treats you right in the end. It runs and it makes you a big amount of money. And it's a tiering in model that you can swing trade in forex. The one that we call Black Bourbon is what most of the people like because it would make you drink. Because what would happen is it's very much like a naked put. You'll win most of the time, but when you lose, you lose a pretty good chunk. And so by just looking at those two different models, it's up to the person to decide how they're going to trade. And they have to pick something that fits with their psychology. That was a big epiphany for me. I didn't realize I'd been around trading for my whole adult life. I started my first trading thing at 27, which was, I'm 47 now. I think maybe it was even before that. It's 92, whenever 92 is. So that's when I started getting around trading. So I'd always been around it, and my psychology had always been wrapped up around it. But it was really odd for me to learn later on that not everybody was wired that way. And that they should really sit down and analyze the model and how it fits to them. So we have what we call core models, and that would be 2 of them. There's a third one, but what those core models do is they teach you to win real quick and tier out and manage off the risk that way, and one tiers in. So it's 2 classical trading methods, tiering in and tiering out.
Okay, and would you consider Betty the one that tiers in? Would you consider that the one that 80% of the people who are going to be using FATtools are going to be utilizing because it's simply a little bit more conservative?
Well, actually, they'll be uncomfortable with that one a little bit because the win rate is a lot less. So that one, I would say that most people like the one that wins instantly. And it's just a quirk in humanity. They need that quick instant win.
Yeah.
If you get something and you take a small loss, it's not appealing for some people. But when you hit a big win, you can hit monster wins when it runs. Really big, huge wins. Because in forex, because you're leveraged, and if you tier into a trade and it goes your way, oh man, you can make a lot of money. But it's the same thing. It comes down to very much like this. One model is very much like your directional trader. That'd be Betty. He'll have lots of little losses, but then a monster win, or your gamma scalper will be like that. If you take Bourbon, it's going to be very much like your naked put player. He's going to win, and then take a big loss if you're not careful. And so I find that most people like the naked put method, but they have to manage it off. And you're probably set up more like an entrepreneur, so you're thinking to yourself, well, hey, I'd rather take the small loss than a big win. But most of the people don't like that.
Yeah.
And you pick whatever one you want to run. It's just a tool. It's a model. It's a fancy way to enter orders so that you don't have to be in front of the computer.
So when you get FATtools, and it works with IBFX and the company. It works with BNTrader 4 and the company that we're working with is IBFX, correct?
Correct.
Okay, so we're working with IBFX. You can download BNTrader for free. You can get FATtools, start plugging them in, start demoing them and whatnot. And once you're plugged into it, Jeff, how does it automate the trades? Does it automate targets? Does it automate stop losses? How does the actual application of it work?
That's a loaded question, but there's an easy way to answer it. And to answer it this way, every model that we put in, you have a responsibility and it has a responsibility. And what needs to be defined to the trader is, what's your responsibility? So you're asking me, what's the model's responsibility? Most of them will find a trade, size a trade, and then do the mundane money management. It will find a trade, size a trade, and do the money management for you. Okay, so by mundane money management, that means moving your stops around. What it will do is it'll alert you to problems or potential problems and say, you need to respond to this potential problem. That's your responsibility. So if you get a problem, like let's say your internet's down, well, it actually has a way that it can sense that the internet's down. A website will email you and say, look, your internet's possibly down. You better check on this. Or if let's say that your broker on one Friday, I was trying to place a trade and I didn't realize it was so late in the day and the market was closed and the computer told me the market was closed. So it'll do little things like that, but it can also tell you, hey, something abnormal is happening right now, and it can alert you to that. So those are some of the responsibilities that you would have as a trader to use a tool. And then the tool would have all the other responsibilities. And each model has a list of responsibilities for you, responsibilities for the tool.
Gotcha. And how long have we been live with the FATtools, Kurt?
With FATtools, we've been live going on 3 weeks.
3 weeks. That's awesome.
So, yeah, exciting time.
Yeah. You're listening to the Trading Justice podcast with Kurt Warner from Richdad and Jeff Crystal from the Bare Naked Trader. And we're talking FATtools and forex, guys. If you guys have interest in learning a little bit about trading currencies, learning more about FATtools, maybe even get FATtools, go to tradingjustice.com. There's a link. There's a forex link for our Richdad webinars. Just click that, sign up. We have them every week. In fact, Kurt, how often do we have the forex webinars?
So the forex webinars are 2. The initial one we hold, I believe, once a week or once every 2 weeks, depending on what's going on. But it is a great opportunity for people to get exposed to, FATtools and the forex market. And as I said earlier, certainly is a market that I would suggest for anybody, whether they are an experienced trader or somebody that's relatively new, to really get a jump start on their trading.
Absolutely, and I agree with that 100%. I actually think, I think people have to learn how to trade currencies right now. I think the things that are going on in the currency market from a macroeconomic perspective, I think it's a must that we learn how to adjust our currencies, how to sell our currencies, and how to make money in the currency market. Jeff, I want to talk a little bit about kind of the U.S. dollar, and then we'll come back to FATtools real quick. Currently, the U.S. dollar is the reserve currency, Jeff, and there's immense pressure on that right now. Talk to me about kind of the problems that you see with the U.S. dollar right now.
Well, the dollar right now, it's hard to tell which way it's going to go for sure, but they've used a lot of arrows out of their quiver to stabilize it. Now, We're the reserve currency, which simply means that if you are Australia and you need to buy oil, you're going to have to pay for that oil in U.S. dollars. Now, this is because of an agreement that Henry Kissinger got into with the Sauds, and it's called the petrodollar agreement, so you can research it a little bit online. Careful some of the stuff you read. Some of it's pretty sensational. But what happened is after we went off the gold standard, for people to want our U.S. dollar, we made sure that the world oil supply was backed by U.S. dollars, so that they had to buy U.S. dollars to get oil. So what that means is if we print money in the United States, that other countries are forced to buy the U.S. dollars. And so the money that we printed always leaves the United States, which it's nice because we don't face inflationary pressures because of that, or very low inflationary pressures. And we've been able to grow our economies quickly based on that dollar. Now, there's a couple problems with it as the internet's become wider and wider used. More people worldwide are starting to understand what that means. What does it mean that the U.S. has an advantage, that they can print money, build their roads, and become a country that everybody wants to come to? Now, a lot of people would like to be able to do that. So here, let's take a good example of what's happened recently, not to pick on President Obama, but he's a kitty cat compared to Putin. And Putin basically has come out and said, listen, you enforce some sanctions against me because of the downing of this airliner. I'll tell my guys or my central bankers that they will not be allowed to price Russian oil exports in U.S. dollars or gas exports, and that means they would settle in other currencies. Well, that can destabilize. That's really can be destabilizing to the United States, because if no one takes our debt and we continue to print money and print money and print money, then it'll stagnate here and cause prices to rise. So you have to kind of play nice in the sandbox to get people to continue to take your currency, especially when interest rates are so low, like we talked about. But Janet Yellen said that they are going to be raising rates. If the more they raise the rates, the more appealing our U.S. dollar becomes. People will start to invest and buy U.S. dollars. If that's the case, and that starts to happen, and more people start to want to get dollars because of the interest rate, and that we're a pretty safe country to invest in to the outside world, then that will cause the dollar to strengthen in the short term. But in the long term, our behavior of allowing our politicians and the American public and investing public's utter lack of understanding of currencies, it's going to come back and bite us in the long run. It's not going to be a pretty thing. Every fiat currency has gone through a devaluation, and the U.S. has just got to wait their turn, and they'll go through a devaluation too.
Yeah, when you talk about Russia and the other BRIC countries, I mean, China is no longer using U.S. dollars to purchase oil. You're starting to see the other BRIC countries, use other currencies, not including the U.S. dollar, to purchase oil. Russia being obviously one of them. From the stat I heard, Jeff, and correct me if I'm wrong, but in 1999, 90% of the oil market was financed in U.S. dollars, and today that number is between 40 and 50% out there. So these things are already starting, and you're already starting to see the BRICS get real bold out there in terms of starting to form their own world bank, so to speak. And so there's a lot of macro risk concerning the U.S. dollars, and like you said, at some point it's got to come back down to the money's got to come home, right?
Yeah, there's some really big concerns for sure, and you're right. There's a thing I traded off for years and years and years called the CRB index. The CRB index basically would tell you it's all commodities priced together, and if those commodities rose, then you could bet that the U.S. dollar was weakening. Well, that relationship is now gone, and it's changed investing worldwide. I don't have time to cover this in this podcast, but there are things that you can do, like you can buy let's say a basket of stocks priced in British pound sterling and compare it to the dollar, and you can make money just off the exchange of that good or service. You could do that through interactive brokers. is a good firm that allows you to trade your account based in other currency denominations. Mm-hmm. And the understanding of this is going to be critical to you retiring. If you don't understand it, it's really, really important. Some good books to read are Harry Dent is some good audiobooks to pick up, or books. He's an economist. That'd be a good one to pick up. Currency Wars by Rickards. Mm-hmm. He was a CIA analyst. That's another good book to pick up. And start to educate yourself on this a little bit.
Gotcha. Now, in terms of Kurt, I want to bring you back in here, and I want to talk a little bit. I want to get your two's opinion on what's happening from a digitized currency, cryptocurrency, and specifically Bitcoin. Where do either one of you see Bitcoin playing a role in the global currency market?
I'll take that if you want, Kurt.
Sure, go ahead, Jeff.
Yeah, Bitcoin. Bitcoin is the way it started, and don't get all offended. The way it started was by people wanted to hide their money. Well, who normally wants to hide their money that has lots of money?
The rich.
You could take criminals. They wanted to hide a lot of money. That's where it started, but then it moved into the general public and became more and more accepted. But why do you want to hide money? You want to move money around without someone being able to see where and how it goes. So you see, for income taxes, for reasons like that, you wouldn't want someone to come to you and say, hey, I want to know where every single penny that you own. Now, Utah did something really interesting. They built we can now, in the state of Utah, there's 3 other states pondering this, we can pay our grocery bill with actual real silver. You can actually put your money in a bank account and have it linked to a debit card. And that debit card will fluctuate to the value of silver, and you can pay it off. You can pay your groceries based on that inflationary rate. Now, how does that relate to Bitcoin? Bitcoin, it runs on this platform called Tor, and Tor is anonymous internet using. And Putin just put out a $100,000 bounty if anybody could crack the Tor. Why would he want to do that? Well, governments, they want to know, we have the largest NSA spy satellite or center here in Utah. They want to know where the money is, who's using it, and who's got it. Well, if you have an anonymous way to move money around, it breaks the central banking system. I hope Bitcoin can hang through that. Mm-hmm. But what I'm afraid of is that the governments are going to come in and say, you've got to open your books, Bitcoin, and you're not going to show us all your users. If that happens, the bulk of the money flowing through there is going to end, in my opinion. So that's the risk to investing in Bitcoin, is when they're cracked, when they crack the Tor, and when they can know all the clients are in there, you're going to have to give an explanation of how that money got there. Where did you acquire it? Where did it come from? How was it made? Was it justly put into Bitcoins? That will be a big deal. A big deal when that happens. So that's a big concern about investing in it.
I know, and I understand that one of the reasons it was created was to hide money. And yes, there's a certain percentage of Bitcoin that is still currently being used for legal purposes. But can't you also say that the cold hard cash has always been used for illegal purposes as well, from an anonymous buying situation? In terms of Bitcoin, what are some of the benefits, though, in using a non-central banking currency system like Bitcoin?
Well, there's the SWIFT system. The SWIFT system is where you transfer money around the world. Mm-hmm. There's a competing system. I can't think of the name of it right now. It's nice because, like, let's say that I wanted to move some money. My wife's Peruvian. I wanted to move something down to her dad. And I sent him some money. Now, this is subsistence money to help him live his life. And what if somebody wanted to tax him on that? Well, I'm not a Peruvian. I don't want them to tax him on that. So the advantage is I can get that money down to him if they would take Bitcoin through an anonymous way. I could also maybe transfer an asset in an anonymous way. And this is a kind of a sad thing. This goes to a broader subject, I think, is if I talk to my kids, they are totally okay with their medical records, their banking records, their tax records being seen by everyone. And I'm like, what? What happened to privacy? And so to me, it bodes to a bigger subject is, are you going to have some level of privacy with your finances? And that's one of the things that is nice. You don't want, if you were going to get sued, you wouldn't want someone to know where all your money is. You want that level of privacy in how you manage your own life. The government already knows too much about you, and we can thank Snowden for pushing that out. So this goes to a big, broader package. But one thing you said that you said, hey, is cash used for criminal activities? Yes, it has been. Yes, true. Do you think the government is going to stick with cash? Most of the monetary system is not cash. It's cashless. Matter of fact, let me, I was going to give you an example, but I decided not to. When you move money around, this is one of the biggest appeals to forex. I guess I can say an example like this. I'll probably get shot by IBFX, but let's say you're a foreign national and you come to the United States, you open an account here in a U.S. bank. You can feel good because of our regulations, but what they do is they get like a gold card, and that gold card, it's called a world debit card. Well, you go use all the Visa transactions wherever you want, and maybe your country of origin, because they don't report back your winnings, is none the wiser. It's up to you to report that back. Now, the problem with doing that is that, let's take what Visa's done to people recently. They took about 50 forex traders about 8 years ago, and they blew them in from a country from Nevis. They had opened accounts. They were trading successfully. They were using Visa cards, and they were not claiming it on their taxes. When they didn't claim that, they got shut down by Visa. So because it was traceable, because that was traceable, they got shut down. Well, where's the true motivation in Bitcoin? It's the anonymous part of it. And you could say that there is some motivation because it's been going up in value against other currencies. So it has some, what I would call intrinsic motivation to get a hold of it. But to me, the biggest motivation of Bitcoin is the anonymity. And if anonymity goes away in Bitcoin, then that's very, very unappealing. That's not a good thing. Well, so when money's printed, here's the question. When money is printed, like the US dollar, who do we owe the interest rate payments on, Matt? Do we owe it to the U.S. government? Do we owe it to the central banks? Who do we owe it to?
The banks.
The central banks, that's right. And they print just enough money to meet the loan requirements, but they never print enough for the interest payment. So there's not enough money in circulation to pay off the interest on the U.S. debt. There's not. Well, how do you get out from underneath that system where someone else can devalue or value your currency? You either use gold or a Bitcoin. So that's the intrinsic part of it. And that's the part that's appealing to some people. But right now, it's the bigger one. It's the one where you're hiding it. That's the more important one.
Yeah.
Does that make sense?
It absolutely does. And it goes back to what you said initially. You said your kids, they wouldn't have a problem with, having where their money's at and whatnot. And it's something that, you constantly see. And that's what people who are against Bitcoin say is, what are you trying to hide, Jeff? What are you trying to hide illegal activity? Hell no, I'm not. You have no right to track everything I do. The NSA doesn't have a right to track everything I do.
Bingo. See, I told you this is a broader issue that's outside the FATtools, but this is a broader issue in the world. And you brought up a good point because am I willing to let someone track me like Snowden does and all my movements and can skew something wrongly, or am I willing to not do that? And so that's really, 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 really an important issue.
Yeah. Well, I just go back to Thomas Hobbes and, Rousseau and whatnot, social contract theory. And when we agreed to the social contract, we didn't give away all of our rights. And that's one of the things that makes this country great and whatnot. And I just see it. It just I know it's off topic, but it just drives me absolutely crazy, that whole argument of what are you trying to hide? What are you trying to hide? We have rights here, and those rights should be protected, and we're constantly giving them away, and without even knowing it, we're constantly giving them away, and so it's a concern. Bitcoin, it's an alternative to the current traditional currency system, and I see the same risks you do, Jeff. But I don't know. The thing that I see is, I think if it isn't Bitcoin, it's going to be something else. You can't stop technology. It's something else is going to be created. The rich will always be ahead of the regulatory bodies, and so it'll just be interesting to kind of see how that Bitcoin discussion evolves over the next few years.
Yeah, it'll be interesting for sure, to see what happens. Right now, they can pretty much track, because of Visa folding, everything that you do with your money, and you don't want to keep all your money in U.S. dollars. I would challenge you at the end of this. I have a good challenge for all your listeners, Matt. A great challenge. Find someone that's from a foreign country, and for example, Poland, or from Latin America, that their parents or someone they know lived through a currency devaluation. Ask them what it was like. What did you do? What did you invest in? Did you invest in anything? What did you buy? How did you live on a day-to-day basis? Why did you do that? Then you'll understand the importance of Bitcoin, gold, silver, and currency studying and trading and tools. But you must go and ask someone that's been through it, because Americans haven't.
I'll tell you right now,
Americans are, one last thing. Yeah. I actually have met Americans who've never touched a foreign currency. I find that so odd in my life that just means that they're too isolated.
The majority of the people I know have never touched a foreign currency. It's outside of maybe they travel to Canada or Mexico or went on vacation somewhere, right? But when you talk about that, I was at a Richdad workshop a couple weeks ago, and I was in Houston, and just an absolutely awesome crowd. Loved that crowd. I just love Texas in general. But in terms of, there was a woman from Argentina. And I do about a 3-hour discussion on currencies, currency valuation, FATtools, forex trading. How do you trade it? And I was talking about devaluation and inflation and some of the problems with fiat currencies and whatnot. And she was quiet. She didn't say anything, but she came up to me on a break, Jeff, and literally she was in tears. I mean, just in tears, because she had just left there, and there was still family there. And it was just an absolutely just some of the stories that she was telling me. It was just absolutely sad, just ridiculously sad. And I don't know if to kind of shift topic a little bit, but I don't know if you guys have read the recent articles coming out of like Peru and Argentina and whatnot about how people are actually living down there. I mean, we're talking about just to put food on the table for your family. You're talking about, the headline was this. The number one currency trader in Argentina is young women. And do you know how that kind of works, Jeff? They get paid US dollars and euros to basically prostitute themselves. And it's not because they want to, it's because that's how they put food on the table for their family. And it's sad.
I've been well aware of this, because then it switches, and then they know, they go out and they hard exchange it. Yeah. I've been well aware of this. I've been reading about this for a number of years, and I can inform you some other stuff offline that you'd find really interesting reading about Argentina, and it's really sad. There's a show some of your listeners won't appreciate, but there's a guy that you should probably watch. It's called South of the Border. It's an Oliver Stone show, and it's you should watch that, and it'll change your mind on a lot of different topics.
What's it called again?
The United States needs to get more educated.
Well, we're complacent in America today. We're complacent because we have iPads and iPhones and all of this stuff. But you're absolutely right, Jeff. The things that I see coming down the pike, and we've never went through a devaluation period, but we are starting one. I definitely believe we're starting a devaluation period for the U.S. dollar. And I see some very big macro risk. And I kind of want to sum it up, and I want to ask both of you two a question, a very pointed question. The U.S. dollar as the reserve currency. 10 years from now, is the U.S. dollar still the reserve currency?
Barely. It took, think it took 20 years to get the euro up online. I would say 10 years. It'll be through some tough times. It'll be definitely wounded and its throes, but I think it'll make it up that far.
Okay, Kurt, what about you?
So there's plenty of time to trade forex. That's for sure.
You got time. What about you, Kurt?
I would say the same. I don't see that happening beyond 10 years as well. And the one thing about, from a trading standpoint, is regardless of whether, what happens to the US dollar or any other global currency, as long as there are currencies to trade, there's opportunity.
Absolutely. That's well said, Kurt. And that's the thing, guys. And one thing you got to understand is if the US dollar does devalue because of all the pressures we are being placed upon it, then there's always something else going up. There's if the dollar goes down, something inherently has to go up. And that's the importance of learning how to trade currencies, is learning when and how to sell your dollar to buy the Australian dollar and get paid to play just to do that, or when you sell the dollar to buy the Swiss franc, or quite frankly, when we buy the dollar and sell the euro, or whatever the case might be. FATtools, which has been the majority of the discussion today, FATtools is a way to automate a lot of your trading. It's a way to get you up and running very quickly. And like I said initially, guys, I have not been this excited for a new software, and I just think you two have just done an absolutely amazing job of not only developing it, but getting the idea out there and getting this out there for the public. And for those of you interested in learning how to trade currencies, go to tradingjustice.com. There's a Richdad link for our next forex webinar, and you can start your journey simply by attending one of our free live webinars there at Richdad Education, and start your journey of becoming a currency trader utilizing FATtools. Kurt, thank you so much for coming on here today to discuss FATtools, currency trading in general. Jeff, same to you. Very, 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 very thankful for that. Final words, Kurt. Final thought.
My final thought, I guess, would be this. One, look forward to, the other classes that both of you are teaching on Forex. Every time I attend a class, I learn something new, and looking forward to that, and also continuing my journey as a Forex trader, and just encourage everybody that listens to this podcast to do the same. And if you haven't traded Forex before, certainly something that you should look into. And if you're currently...
You've been listening to the Trading Justice podcast presented by Trading Justice and Tackle Trading. Check us out at tackletrading.com, tradingjustice.com. It's been a pleasure to have Jeff Crystal, BNTrader, Bare Naked Trader on talking about FATtools. Kurt Warner from the Richdad Education group to talk about FATtools as well. Until next time, we'll see you on the road.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.